Welcome back. In this video, we are going to look at a trading strategy that can help you take good decisions with respect to long-term investing. We are using the Nifty to gold ratio here. This chart in the middle is the ratio chart between Nifty and gold. We have taken the NSE Nifty as the ticker for the numerator and the gold INR value per gram, that is per gram gold price, as the denominator for creating this ratio. The first pane here is of Nifty, is a line chart of Nifty. And the third pane, in the third pane, we have applied the RSI indicator on the ratio chart of Nifty versus gold. In the past, this model has given some very good reversal signals, which were long-term reversal signals, and this signal worked very well over the last few years. So we'll look at the performance of the signal over the last few years. We'll focus on the RSI which we applied to the Nifty gold ratio. As you can see in this RSI chart, we have these dashed lines which mark the overbought and oversold levels for this indicator. Below 30, we consider RSI to be oversold. Above 70, we consider RSI to be overbought. When this indicator goes below 30 level, then it's time to be alert because the market may be bottoming out. Recently, this indicator was below 30 and it stayed there for some time. This ratio of Nifty versus gold is consolidating in a broad range, largely because while Nifty has rallied, but also you have seen that gold has rallied a lot in the same period. Let's now look at the history as to what happens when the RSI falls below 30 levels and what kind of price action we saw in Nifty after that. So here we see that the RSI fell below 30. The ratio was trading around 3.3. And in Nifty, we saw a major rally from here. Nifty essentially moved from around 17,000 levels to the 26,000 levels. That's an upside of almost 50%. Then this is the COVID bottom. In the COVID panic selling, we saw that this RSI was below 30 and again a bottom was formed, and in this case Nifty rallied from around 9,000 and it kept rallying till around 18,000 levels before it entered a major correction. Similarly, we see that this RSI fell below 30 level sometime around August of 19, and between August 19 to December 19 we saw a brief rally in Nifty from around 10,800 levels to 12,300 levels. This was a 15% rally in Nifty. This is probably the most disappointing rally in this model. Then again, here we see that RSI was below 30. And here Nifty started rallying from around 10,500. And then it kept rallying to 11,870, then went ahead to 12,300 levels. So this is how this indicator has performed. So every time when RSI is applied on the Nifty gold chart and you see that this RSI is oversold, then it's a signal that the market may be oversold and there may be a major rally ahead. Similarly, here in the latest data in April and March, in March, April and broadly May, you see that this RSI level fell below 30 and it stayed there for some time, and now we have RSI climbing, and hence I expect the market rally from here, and maybe we see a combination where now Nifty rallies but gold takes a pause, or maybe it corrects by 10-15%, and so this ratio of Nifty to gold may increase while Nifty creates new highs. Hence this indicator can be a good signal to make long-term investments in the market. Although I should caution that this indicator should just be one input in your trading decision or your investing decision. So of course there is a possibility that then the rally stalls at some point. However, considering the fact that RSI has spent quite a bit of time in the oversold zone, I expect that this rally will be substantial and you will see a substantial correction in Nifty to gold ratio, which currently sits at around the 2.8 level. So there can be major rally in Nifty and a major fall in gold, because of which you will see a correction in this imbalance. With that, we come to the end of this video. I hope you enjoyed it. Thank you for logging in.